All right, guys, back to work. Back to work weekend is over. Hope you guys had a fantastic weekend. Let's get back to work and make some more money this week. Boy, markets keep on melting higher this afternoon after that big miss on non-farm payrolls last Friday. And I'll tell you right now, anytime we see a market that keeps melting higher like this over a 2-day period, there's always two specific trades I look for the following day. I'm going to cover both of those trades in the video tonight. I want to make sure you guys have a roadmap to make some money tomorrow. Before we jump in, though, it's my favorite trades for Tuesday. Make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these videos, if you enjoy these lessons, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. But enough of the intro, though, Joe. Let's go make some money on Tuesday. Boy, the markets just keep on grinding higher and higher and higher. Don't you worry, though. These scenarios are pretty easy to make some money for tomorrow. Now, charts are all ready, as you can see here tonight. NASDAQ and triple Qs are all ready. The S&P and the SPY is ready. I have three, I think, pretty simple clues right now on these charts here tonight that are telling us where the winning trades are going to be for tomorrow. One of those clues is right here on this 60-minute time frame. You can easily see we're bullish overall right now on the 60-minute. I always like to use this 60-minute, this hourly chart, to give me the best overall directional bias. That tells me the best focus of my trading for tomorrow. Keep it simple, where the best odds of success are. But the problem is the 60-minute time frame, it only gives me the overall direction. The direction is oftentimes the easy part, right? You probably don't need me to tell you we're bullish right now. I have two more important clues on the tick charts tonight that will make our entry timing, right? Because timing the entry is always the most important part. Let's talk about that for tomorrow. Two more important clues. The 60 minutes is very bullish. Let's now go down to our tick charts here. There's no major news for tomorrow, so no major news on our radar. But let's now dive into our tick charts. This, of course, is a 7,000 tick chart linked up there in the upper left-hand corner. I think tick charts make pattern recognition so much easier because the way I trade patterns every day with our students in our trade room. So tick charts, I think, make everything easier to time the best entries. Again, 7,000 tick chart there, upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only tool we use, indicator we use, to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. I mentioned two more important clues. One of them is this big move higher we've seen the last couple days. Had that big pop up after non-farm payrolls last Friday, and we just kept on melting higher and higher and higher here today. Anytime we see a big move in one direction, I don't want to buy way up here. I don't want to buy high. Buyers want to buy low. Anytime I see a big move like this, I always expect to get a deep pullback and a retest of the high. More specifically, a two-legged pullback and a retest of the high. That's what one more important clue tells me. There's one more clue. Third clue is that range we had from last Friday's non-farm payrolls. Now, ranges. If you know my style, if you're taking my free video classes right now, you know how much I love ranges, especially because whenever we see a range breakout, markets love to pull back to this breakout pullback zone, kind of the tops of that trading range, and retest the high. So put all of these clues together. We know we're bullish overall on the 60-minute time frame. It's a big move higher here on the tick charts. And again, we have a range breakout. Now, when I see this, when I see a range breakout into a big move, there really is two specific types of trades I look for the following day. One is the most common. Let's talk about that one first here. But the second one is honestly my favorite. It's the easiest one to make money with. I'm going to cover that a bit later on in the video. So if you like finding winning trades, I would definitely recommend stick around all the way to the end. But let's talk about the most common situation. Whenever we see a range breakout with a big move higher like this, I want to buy low. I don't want to buy high. I want to buy low. What I do is look for a two-legged pullback and a retest of that high. Now, there are lots of ways in which we can make money on this. For example, with the right setup, I can short during that two-legged pullback. I'm going to try to buy that two-legged pullback off that low. And if we play our cards right tomorrow, a double top reversal for that short coming off the high as well. There are long side trades. There are definitely short side trades after a big move like this. So a two-legged pullback, I think, is pretty easy to understand in theory, but let's kind of break this down a bit. That way you know how to time the perfect entry here for tomorrow. Now, in my free video class, we talk a lot about measured moves. When I think of a two-legged pullback, I think of basically a measured move or a two-legged move that goes a little bit more than a measured move, right? So think about symmetry, A, B, C, D, one leg and two leg. I don't know exactly how far that pullback will be, but that's the system I use to find that two-legged pullback. It's a bit more than a measured move. Now, I'm not a big fan of picking bottoms. I'm not going to blindly buy that low because for all I know, it'll keep on going lower. So instead of picking the bottom, instead of blindly buying that low, I like to use this combination of two of the entry patterns I teach in our free video classes. The first one's a failure pattern. I'm not going to blindly buy that pullback, but I know we're bullish overall. And I know that a deep pullback will probably do two things. One, it will attract in more of the buyers in the market. And also two, I would imagine a deep pullback will confuse a lot of inexperienced traders, rookie traders, into thinking this as a reversal. So if I can get these bears to try a couple times, I'd like to use, and again, I call these failure patterns in our free video classes, I would like to use basically a stop run, right? I'd love to run those stops and kind of squeeze those stops back up to retest that high. Now watch closely because this is usually not the only trade we can look for tomorrow morning. As we go higher, I'm looking for now what's called a trap pattern. It's basically going to be a bear trap pattern. It's a higher high in price and a move right below that low, right? So this is one way I want to buy this thing on the pullback. Again, think about that two-legged pullback, a bit more than a measured move, get down into these areas of support. You can notice here I've got my breakout pullback zone, my channel zone off of that low. And again, we're not going to pick the bottom on this. We're not going to pick the bottom. We're going to trap in or rope in those rookie traders who think this is a reversal. It's probably not a reversal after some big move up we've seen the last couple days here. Trap those rookie bears in, use that failure pattern we love so much in our trade room. And then as we're going back up to retest the high, think about now that bear trap pattern, right? It's basically a higher high in price and a trap. The entry is right below that low. A lot of examples of that, of course, inside the free trading course. Now think about this, right? If we get in, one of my favorite trades on these, if we can get in on that two-legged pullback, if I can get these bears trapped in and get long down here, where's my target? My target is back up to retest that high, right? So is it safe to say that anybody who buys down here becomes a seller back at the high? Now, what do you think? Is that a good place to be a buyer? No, especially not after a big move up the last few days. One of my favorite trades, we talk a lot about this in our free video classes, is we call it crown reversal pattern. So watch closely here. When all the professional buyers, when all the pros who bought nice and low with that failure pattern, when they begin taking their profit up here, who's buying up there? Who's buying up there? Rookies are buying up there. Now, watch closely. If I can get these rookies trying once, go lower, twice to buy into it. Now, look closely at this one. Again, it's called a crown reversal. It'll be a lower low. Why lower low? Because buyers want to buy low, right? So buyers buy once, buyers buy twice, and the key to this is because you're going against the overall directional bias, I like to look for this. Basically, it's combining. If you wrap together a trap pattern and a failure pattern we teach in the free video classes, crown reversals are the best way that I know to short off of that high. Now, we know the market now wants to go back and take out that low, right? Oftentimes, that crown reversal will end up into a bull trap pattern off the high, right? So you get a lower low in price and a trap there right above that high. So think about this sequence, right? Think about this sequence. Again, it's a big move up. We don't want to buy high. I want to buy nice and low. How low? A two-legged pullback, a bit more than a measured move. Get down into that breakout pullback zone we have marked up here on the chart. Don't pick the bottom. Use that failure. Use that bear trap pattern, right? On the way going higher, right? Use that bear trap, that failure into bear trap pattern. Then take your profit off, put the highs up there, rope in those rookies, a crown reversal pattern. Basically a bull trap and a failure pattern combined together. And then speaking of trap patterns, as these bears now sort of make that run back down to retest low, you want that bull trap pattern, that lower low in price and that trap above that high. Now, we might get one of them, we might get two, we might get all of them for tomorrow, but these are the entry techniques I'm looking for tomorrow morning in our trade room. Now, let's slow down for a second because I know most of you guys and gals watching right now, you know these. You know how we trade traps, you know crown reversals, you know why we love failure patterns in our trade room. But if you're watching for the first time right now, this might be a brand new language for you. I look at things quite a bit differently than I think a lot of other YouTubers do. So if you're here for the first time, if none of this makes sense, don't you worry. I teach all these entry patterns, the entire strategy. I have hundreds of examples of failures and traps and a lot of crown reversals. I teach all this in a lot more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because I'll tell you, the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then we'll take it one step further. I'll teach you 4 my favorite entry patterns, help you start making money on your own. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. Get hundreds of examples of all the setups I'm talking about tonight. Also be aware too, I'm going to put all the important links tonight. I'll put in the description of the YouTube video. I'll put my free class links down there. We trade together every day, 8 o'clock Eastern time. I'll put the membership to our trade room down in the description of the YouTube video. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All the details are there in the description of the YouTube video. That way you can learn more about when I say two-legged pullback, right? Trap the bears on the wrong side of the 21 EMA, failure into trap. When I say stuff like this, you'll know what the rules are for that. You'll know what it look like on real charts. But think about that double top, right? That crown reversal and back down again, right? I'm getting excited just thinking about this. So that's the basic scenario. Let's talk about 2 variations of this, and then we'll go to the NASDAQ. And again, the NASDAQ, we'll talk about what really is my favorite setup for tomorrow. This is the most common situation we see after a big move, after a breakout. So, for example, one common variation of this is we oftentimes will get a really deep two-legged pullback. We'll get that nice bear trap down there, trap those bears in with a failure pattern. We'll get a nice winning trade out of that run going higher. We'll take our 1-to-1 first target, stop moves up to point of entry. But oftentimes, because that two-legged pullback is so sharp off the high, because we're so high up over the last couple days, oftentimes the strength of that two-legged pullback, they'll come in, they'll hold some of these key areas of resistance, and they'll run it back down again. This is very, very common. It is not a reversal. Anyone who sold on that pullback will probably take profit where? Back at the retest of that low. In this situation, I'll do it again. We'll do it again. We'll go out. We're not gonna pick the bottom on this. We'll wait for those bears. Try once, try twice. And again, why twice? Because I need those sellers locked in. I need their stops to fuel that reversal back up again, right? That's why we use failure patterns so much every morning in our trade room. So it's a failure pattern. And again, we know where the market wants to go. It wants to run back up and take out that big high. On the way back up to retest the high, it's always going to be that bear trap pattern. It's a higher high in price and a trap right below that low, all right? So again, if we do get that two-legged pullback, we oftentimes will get a winner out of that initial trade there. there, but for whatever reason, it rolls over, right, and tries again. Once they retest the low, anybody who sells short up here, they become buyers, right, at that low. These are rookie sellers who are selling down. These are not professional sellers. Professional sellers will sell that retest of the high we mentioned earlier on in the video tonight. We'll look at that failure pattern into that bear trap pattern and make that run back up. These double bottom reversals, these double bottom add-ons are oftentimes the most lucrative trade we find in our trade room. So don't forget about those. Now, I'm sure some folks are wondering, okay, if we are expecting a pullback right now, how would you short this thing during that pullback? Well, anytime I'm trying to short in an overall bull market, it's always that crown reversal pattern, right? Well, think about this. We're bullish overall right now. All of this momentum is very bullish. I don't have any momentum on the side of the bears. So for me to want to sell short right now, I'm playing with fire. I have to get the rookies roped in. Get those rookies trapped in because I need their stops. I need their stop losses to fuel this move going back down again. Remember, watch this thing closely. It's going to be it's one try for the buyers. It'll get below the moving average. It'll be two tries for the buyers. It has to be a lower low because you have to know that buyers are buying into it as we're pulling back lower. The trick is before we go back and retest the high, if we retest the high, it resets everything again. If we retest that high, it resets the entry counting, as we call it. The trick is you want to see that nice, strong red candle closing underneath that moving average. We covered this, of course, inside the free video classes, right? Now, think about this, right? This is a crown reversal. It's a lower low in price and a bull trap up above that high. Now, think about a two-legged pullback, right? There's one leg. There's two leg, a bit more than a measured move. A crown reversal pattern can easily parlay now into that two try failure, that failure into that bear trap combination. And then again, once we get back to retest the high, we take the bulk of our profit. If price keeps going tomorrow, we'll cross that bridge once we get there. Unfortunately, I can't cover every scenario here on these videos, but if we do start seeing profit taking up at these highs, right? That is definitely my final target will be for tomorrow, back up to retest the high. I have no interest, though, in buying into that high, though, right? If we keep going, sure. If we keep going, I'll then start buying breakout pullbacks off the high. But in most cases, though, we start seeing those rookies once, rookies twice. And again, it's the same thing, right? Lower low in price, that crown reversal coming in off the high, right? So we're seeing these buyers struggle these highs here, use those stops to run that sucker where? Back down to retest the low. So crown reversal patterns are always the best. Oh, and also don't forget too, whenever we're going against the overall trend, these crown reversal patterns, these are half size positions. At least for me, they are, right? Half size positions, quarter size positions. If you're not making money yet going with the trend, there might be a zero size position, right? Save your bullets for trades to go with the trend, right? Like that failure in a trap combination we keep talking about, right, guys? So that is, again, one of the two patterns we look for after we see a big move, after a range breakout we saw last Friday, of course, into the session here today. Let's now go to the NASDAQ now, because the NASDAQ, let's talk about one more scenario. It's not as common as the first scenario we talked about here a moment ago, but I'll tell you, it's a whole lot easier, and it's definitely my favorite way to make money after a big move like this. NASDAQ, clearly very bullish right now on the 60-minute. You probably don't need me to tell you that. Again, on the tick charts here now. Now, keep in mind, a 4,000 tick chart here on the NASDAQ, slightly different time frame because the S&P is quite a bit more liquid, more volume than NASDAQ is. The bottom line, though, is we have the exact same clues here right now on the NASDAQ. We have a very big move up in the wake of that non-farm payrolls. Big moves tell us do not buy high. Look for that nice, right, two-legged pullback to buy nice and low. Again, we have that previous range. That range, of course, tells us to expect that deep pullback into that breakout pullback zone. So pretty much everything we talked before there on the S&P can pretty much be applied here right now to the NASDAQ. I want that two-legged pullback. I'm not going to pick the bottom. We'll trap those bears in, squeeze back to retest the high, and then see at that point now, do we keep going through the highs? If we do, we'll look for breakout pullbacks above the highs. If not, crown reversals off the high, as we discussed earlier here in the video here tonight. That is the most common scenario. But now, if the trading gods are watching down in this video here tonight, we'll get a range for tomorrow. Anytime we see a big move in one direction like this, we always keep an eye out for a trading range the following day. Now, ranges. Ranges are really, really simple. If you're taking my free video classes right now, you know I love range markets. You know why? Because they're so easy to make money with. The most important thing that you need to understand about ranges is that ranges are magnets and they love to rotate. They're magnets and they love to rotate. The amount below the range goes above the range, below the range, back and forth we go. The amount above is below, the amount below is the amount above. You see examples back there of how I measure back and forth around that trading range. So ranges are magnets and they love to rotate back and forth. So if we understand that factor, right? If we understand that, if I see a range begin to develop here right now, I'm going to look for that same type of two-legged pullback here once again. But the most important thing now, though, is now that range comes into play here. Get the breakout going lower. Think about that two-legged pullback I mentioned a moment ago, right? Same idea here, a bit more than a measured move. But most important thing, though, is in a range mark, we find levels of support. Find levels of support. Now, I teach a lot more about this, of course, inside the free video classes, but find an area of support. Then don't pick that bottom. Think about now trapping in those bears once again. Let them try once, let them try twice, and use that same combination, that failure into that, in this case, a bear trap, higher high in price, a trap below that low. Now think about this. How do ranges work? They want to go back to that range, right? So that's definitely a target. But remember, the amount below the range is now projected now above the range, and that becomes a really, really easy target to hold on to because for most of us, we know exactly where the market wants to go. I always save a little bit of the piece of the runner, right? A little piece of the position to run up to that pendulum swing. So if I see a big range develop overnight or tomorrow morning, unfortunately, I don't know exactly where that range will be right now. But if we start going sideways overnight, I'm going to look left, find prior swings, find prior support levels underneath that trading range. I'm going to wait for a breakout. I'm not going to pick that bottom or blindly buy that bottom. I do not have a crystal ball, right? It may keep going and then back up. For all I know, I'm going to let those bears get trapped in, let those rookie traders chase after it going lower, use that failure to run their stops and that failure into bear trap pattern on the way higher. And again, targets coming off, top of that trading range, always, at least I always do, I always leave a little piece of that trade to run up to that pendulum swing. Now, where things get a bit more difficult, right? That's kind of the easy way to do it. Where things get more difficult is like this, the fake out breakout. This is the stuff you have to worry about or not worry about, but be prepared for after a big move in one direction. We oftentimes will go sideways here overnight, but then we see this strong punch up that immediately gets rejected and runs back down again. All right. Now, first of all, to sell that reversal, this is where that crown reversal pattern comes in handy, right? It's a lower low in price. Again, lower low in price, a trap above that high, not to new highs. Again, if we retest the high, it resets the entry counting, right? So it needs to be a nice strong red signal candle and that run back down again. Now remember, once we know how big that move up is, now we know where to take some profit on the other side of that trading range. And now we know roughly about where we want to look for entries going higher back up into that trading range. Now, these scenarios, there's a lot of momentum now. But for the bears, as that rotates off the high, it's going to try. Well, for example, we see a lot of times where we'll get this strong run down. We'll go out, we'll get that to try failure pattern. It'll run back higher. We'll get the 1-to-1 first target. It's a winning trade overall, but because the strength of that move is so strong, sometimes it holds the underbelly of that range like that, and it does it again. Again, these double bottoms, these retests, it's an overall bull market. This is not a reversal. So once we see the retest of that low, unfortunately get bounced out of that trade, I'm in already, but do it again, right? 1 try, 2 try, squeeze those stops and run it right back up again. So just be aware of that. Be very careful trading breakouts above a trading range after a big move higher like this. It's one of the most common kind of fake out breakouts we see. We saw one of these, of course, after that non-farm payrolls, right? Went up into a range like this. It fake out breakouts, then rolls, and then does the run back up again. So keep your eyes on that. Again, I wish I could be more specific on where the range will be. We'll keep an eye on that for tomorrow. But watch that trading range, find levels of support underneath that range, and wait for that breakout pullback, wait for the pullback, trap those bears in, and run it back into the range. And again, if it runs higher, be very, very careful chasing after it as it runs higher. That is very overextended, overbought territory. Oftentimes, it'll bull trap up there, slam back down, crown reversal off the high, the amount above, the amount below. That creates our target for the short. And again, it's that same failure pattern into that bear trap pattern we keep talking about here on this video. And again, it may roll over here and do it again, right? Double bottom and do it again. So keep hitting those, keep trapping those rookies in, keep grabbing those bear trap patterns, and keep on hunting for that rotation back to retest recent highs and back to complete that pendulum swing. That is, again, one of my favorite trades here after a big move up in one direction. Find the range and trade those failures, that rotation as we call it, back and forth from range top to range bottom. All right, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making consistent money in these markets is to come out and learn this stuff and trade with me every morning in our trade room. We open up 8 o'clock Eastern time every morning. I'll put all the important details, the free class links we talked about tonight. I'll put our trade room membership links, my Twitter feed. It'll all be there for you in the description of the YouTube video. Definitely, I would recommend start first on the free classes, get your feet wet, learn the fundamentals, and something tells me sometimes we don't see you trading with us in the morning trade room as a brand new member. Any questions, any issues getting started, any comments, concerns, you can always call the office or use live chat. We're always here to help out if you guys need help along the way. But I'll tell you, a fantastic day today. Got another big day coming tomorrow. Let's keep the good times rolling. Hope you guys learned a bunch here this evening. Hopefully, I'll see you sometime soon trading with us in the morning room. In the meantime, be well, be nice to each other out there, and go make some money tomorrow. Adios, amigos. Bye for now.